National Executive Council endorses 2022 Finance Bill. Securities and Exchange Commission canvasses tech innovations to improve market efficiency. Asia Pacific stocks bounce as investors assess Omicron COVID variant concerns. Oil prices jump nearly 4%. Plus, oil climbs over 2% ahead of OPEC meeting amidst Omicron COVID variant concerns. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Benny Adams, your guide. Good to have you join us on the business side of life. I will start by telling you that the National Executive Council has endorsed the Finance Bill for 2022. This was at a virtual meeting of the council, which had in attendance all state governors, FCT minister, central bank governor, and the federal government officials. Highlights of the bill was presented to the council by the Minister of Finance, Budget and National Planning, Zainab Shamsuna Ahmed, who explained that the proposed bill is intended to be passed alongside next year's budget. According to the minister, some of the proposed legislative changes cover domestic revenue mobilization, closing tax loopholes, public finance management and tax administration reforms, as well as international taxation issues. She added that some of the principles of the proposed Finance Bill 2022 are to ensure fiscal equity, avoid double taxation, and support businesses, especially MSMEs. President of the African Development Bank, Akinwumi Adesina, has lent his voice to the conversation on the need to enhance the accounting profession, reposition accountants as professionals for greater impact and relevance in nation building. Speaking at the ongoing 51st Annual Conference of the Institute of Chartered Accountants of Nigeria in Abuja, Akinwumi says bridging the trust gap in governance will enhance economy.
I think that we're a lot of things we have to do. Governments are important, private sector is important, but the thing that holds the whole fabric of society together is trust. And we must make sure that we run more responsive institutions, private sector also being transparent, accountable to their own shareholders, and that we all work together to make a society in which trust becomes the fundamental basis that will spur us to greater growth and development.
And now the debt management office says debt pulled Nigeria out of recession twice, making it a major propeller of growth. This was disclosed by the Director General of the DMO, Patience Oniha, at a workshop on executive leadership. DMO Boss explained that public debt was critical in assisting Nigeria's recovery from the recession brought on by economic shocks that strained the country's revenue. She said the initiatives to finance capital projects through public-private partnerships should be maintained to reduce the government's requirement for direct borrowing to fund infrastructure projects, adding that Nigerian corporates now have access to the international capital market through Nigerian treasury bills, the FGN bonds, savings bonds, Sukuk green bonds, Euro bonds and the diaspora bonds. She stated that since 2017, when the DMO began issuing sukuk on behalf of the federal government, the issuances have generated over 365 billion naira in proceeds, while over $12 million in Euro bonds have been issued since 2011. And the desired sustainable growth of any society is dependent on an inclusive, safe and disciplined society which adheres to principles of transparency and accountability. This is the standpoint of President, Institute of Chartered Accountants of Nigeria, while commenting on the theme Trust in Governance as part of activities marking the 51st Annual Conference of the Chartered Institute of Accountants of Nigeria.
The theme of the conference, Trust in Governance, and the various sub-themes were painstakingly chosen to address critical economic, corporate, and institutional issues. We are upbeat that we will all rise from this conference with a new orientation.
Accountants have a whole lot to do with re-establishing trust in government, and this can be done through reforms in the public finance management system.
It has come to stay. Nobody can avoid the move in technology these days, not even just professional accountants, but even all aspects of the economy. We need to embrace it to make us achieve better, to make us more efficient. And this issue of accuracy and transparency that we're talking about, it enhances it, it makes it possible. Because what machines can do in 1 hour, 10 people cannot do in 1 week. So the place of it is that it makes all of us work more efficiently and we deliver more and better services.
Both private and public should ensure that there's transparency and accountability in whatever they do, so that at the end of the day, the people, the led, who are those we are governing, they will be able to feel the impact of governance.
The Securities and Exchange Commission, SEC, has identified technology innovations as means to enhance the efficiency and transparency of capital markets and enable financial intermediation. While speaking at the Nigerian Exchange Limited NGX Capital Market Conference, the Director General of the Commission, Lamido Yuguda, noted that the capital market of every nation plays a strategic role not only in allocating scarce resources, but in harnessing the huge investment opportunities in agriculture, infrastructure, oil and gas, natural resources, as well as in other sectors of the economy. Yuguda said the International Organization for Securities Commission acknowledges that the use of technological innovations by capital operators could potentially create significant efficiencies and benefits for firms and investors, including increasing execution speed and reducing the cost of investing services. According to him, the organization also notes that this use may create or amplify certain risks which could potentially have an impact on the efficiency of financial markets, resulting in consumer harm. Still on that conference, the federal government says it's partnering Nigerian Exchange Group to mobilize resources to drive its growth plan in the bid to speed up economic recovery. Vice President Yemi Osinbajo stated this at the Nigerian Exchange Group Capital Market Conference in Abuja. Musa Abubakar reports.
The 4.03% Nigeria's third quarter GDP growth is a welcome development for many. And in participants here at the Capital Market Conference, the trajectory must be sustained despite limited resources. This is considering the fact that more capital is needed for infrastructural development and investment in key sectors of the economy.
And that foreign investors are reassured of foreign exchange mechanisms and other regulations that will enable them to channel their resources in and take their resources out with the least possible constraints.
This conference provides an opportunity for us to jointly think through the ways we can improve the policy and legislative process in government to make sure that government facilities allows capital to flow. It's important for all players and stakeholders to be more concerned about making our nation's capital market a viral hub for investments.
Stakeholders believe that the capital market is a veritable tool to mobilize long-term resources for development.
We're well placed to support the economic recovery plans of the government and contribute to the development of the Nigerian capital market by leveraging on the many opportunities
around our drive for retail investors. We think that the capital market should be a place not just for a wealthy few or a few Lagos-based people, as some people like to throw at the exchange, but a place really to create wealth for a very wide population of Nigerians.
We're also engaging with the capital market participants. The capital market had done a capital market master plan, and we had asked the capital market participants to support us by fashioning out savings policy, and the work has been completed. Excellent work that has been done.
Increase financial inclusion.
The conference seeks to position the Nigerian capital market to attract greater global flows for sustainable economic recovery. In Abuja, I am Musa Abubakar.
Our discussion will focus on the fallout of the NGX Capital Market Conference and development in the domestic markets. And joining me is Professor of Capital Market, Nasarawa State University. He is Professor Uche Uwaleke. Prof, you're welcome to Business Express.
Thanks very much, Benny. My pleasure.
Good to have you at a time such as this.
Yeah, thanks.
Well, there has been ongoing reforms in the capital market. We had a conference some few months ago, and now this one. Can you tell us about this and how this is impacting on the national economy as well as transactions in the market?
Yeah, thanks very much. The one we had just recently is the maiden conference of the Nigerian Exchange. As you know, the Nigerian Stock Exchange, following the mutualization, broke into three separate companies. Yes. So one of them, the Nigerian Exchange Limited, which is the operating arm, organized the conference, and it brought together I would say the relevant stakeholders, beginning
those playing in the markets,
yes,
the government agencies, the regulators.
As you saw,
yes.
The Vice President himself was there. Yes. The legislative arm was also there. The Speaker of the House of Rep, was there. The regulator, of course, Apex regulator, the SEC was there. Yeah. The operators, the investors. So it was indeed quite a successful one, and very far-reaching decisions, recommendations, have been made. Of course, going forward, I expect that as these things are put into practice, I want to expect that our capital market will be better for it. The conference, by the way, was titled "The Future, Capital Market." So it was a conference that was looking into the future, which was why the emphasis was on innovation, creativity, innovation in the market.
Okay, Prof. Talking about expectations, which you mentioned, there has been ongoing reforms before now, which led to the demutualization. And from the demutualization, we were expecting much progress. So, will I say there should be a progression in this growth? The market keeps going up, down. Yesterday, it was minus 0.05%. Losses are being recorded, though gains are. I might be mistaken. We are kind of having more losses than the gains. What's responsible for that? But with the federal government's commitment now to partner the NGX, are we going to see any changes likely, possibly soon?
Well, I would say even the concern was expressed by the Vice President, at the conference. The Vice President reminded the audience that the Nigerian stock market was adjudged the best in 2020, despite the the COVID and all the negative things. Yes. So it was adjudged the best, returning over 50%. And as we speak, the return has dropped, significantly to, below 8%. It's around 7.4%. 7.33%. So the concern was, how do we sustain the growth, in that market, which was what the conference was all about. Yes, it's talking about what has been done so far. We expect that demutualization will have a positive impact on the market, but of course, as you know, it's something that was done sometime this year. The impact may not manifest overnight. It's really going to take time. In the recent times, as you observed, yes, it's been mixed, performance. But again, you also have to realize that that's the nature of the market. It's bound to go up and down.
So, Prof, are you saying there's no cause for alarm for investors?
There isn't any cause for alarm. As a matter of fact, what you're experiencing now, this week, for example, the market has been in the red since Monday. What you're experiencing now is profit taking. Profit taking is likely going to linger for quite some time, because it's usually associated with festive seasons. As festive seasons approach, you'd expect people to want to sell, to have some cash for the festive season. And some portfolio fund managers are also rebalancing their portfolio, revising their portfolio. So you find these kinds of scenario happening. So there is no cause for alarm. The vice president rightly observed that there is need to attract foreign investors more to the market. As you know, following COVID, a number of foreign investors left the country and left the market, and that also impacted negatively on our foreign reserves and the exchange rate. So how do we attract them back to the market? Is also trying to ensure that even the risks associated with investing in the market is reduced, which was why the VP, you talked about how do we reduce the high risk premium associated with the market. So it has to do with the risk, and these risks are things that come from, again, not just the internal factor, but even at the macro level. You have insecurity, for example. Insecurity is also affecting performance in the market and also driving investors away. You also have issues around the infrastructure. Okay, so when you fix some of these macro challenges, they have a way of impacting positively on the market through the companies that are even listed on the market, because companies are bound to have lower cost of production, and that will of course rub off positively on the bottom line. So when companies do well, you expect that their share prices will go up. So again, it's something that is tied to the performance of the macroeconomy,
the regional economy,
exactly.
So okay, in reducing this risk, Prof, there is issue of retail investors coming in. How is that going to play out? And are there incentives to also encourage more investment, more like people are engaging in profit taking at this particular point in time?
That issue also reverberated at the conference. How do we bring in more retail investors in the market? And of course, doing so would really ensure that if the market is growing, there's inclusive growth. So that is not just a few people or a few institutional investors who are playing. So how do we incentivize? How do we bring more retail investors? The statistics are not too, would I say, encouraging. We hear, for example, that even the country is dominated by youths in terms of population.
Sure.
But from what we were told yesterday, the average investment age, if you like, of in the market today is 53 years. So
older people tend to be into such investment.
Yes, are the ones doing. So the youths
not the younger ones
are not doing. So how do we bring in these people? This sort of people is again where technology comes, which is why I'm happy that MTN, if you look at the recent what MTN is doing now, they just launched their their offer for retail investors, and they are also creating part of the channel through which people can buy MTN shares. The retail one they're doing, they're doing over 570 million shares. They want to sell to retail investors.
That's quite huge.
Yeah, so they're also doing that through a digital platform that is being handled by the Nigerian exchange. So it's possible for you today. Okay, the stage we are getting to is a stage in which you can use your phone, use an app, and do your investment. One of the things that was also mentioned yesterday also has to do with infrastructure. Infrastructure that is connected with clearing and settlement. Why is it, for example, that if you sell shares, you have to wait for 4 days before you get your money? So these are the constraints. Can we use technology, to improve that, so that if you sell shares, you get your money that same day, instantly, as we now obtain abroad. So that's moving from T+3 days transaction cycle to say T days. So that's what technology will do, and that's also what innovation will do, which is also part of what the conference
and talking about innovations and technology, the you to key into it. I know for me, growing up, the shares I have now were bought by my father for me, which I've not been able to adopt to it. But this is encouraging.
Yes, going forward, it's not possible. It's possible for you to
get with a click of the button to get to do it. Thank you so very much, Professor Uche Owalike, for sharing your thoughts with us on how the market is going and how it should go.
Thank you, Benny. My pleasure.
Well, moving on, it's been a red day on the Nigerian equities market on the first trading day of the month of December, obviously based on investors' worry over the virus. The all-share index lost 1.81% to close at 42,463.16 with market capitalization at 22.157 trillion naira. 335 million shares valued at 3.552 billion naira exchanged hands in 3,891 deals. FBN Holdings, the Universal Insurance PLC, and Zenith Bank were the most active shares at the end of trading. Well, let's take a trip to the commodities market. And now oil prices rose more than 2% on Wednesday, recouping some of the steep losses from the previous session, as major producers prepared to discuss how to respond to the threat of the heat to fuel demand from the Omicron virus. Brent crude futures rose $1.90 to $71.13 a barrel after a 3.9% slump on Tuesday. U.S. West Texas Intermediate crude futures rose $1.71 to $67.89 a barrel after a 5.4% drop on Tuesday. And on the global scene, Asia-Pacific stocks bounce as investors assess Omicron COVID variant concerns. Oil prices jumped nearly 4%. But Rebel has more on that.
Hello and welcome to the Global Market Review. It was a positive trading day on the first trading day of December as stocks across the globe rebounded on Wednesday, except for those in the US. Major markets across Asia bounced back following losses the day before that were triggered by renewed uncertainty on the Omicron COVID variant. Hong Kong's Hang Seng Index rose 0.78% across 23,658.92. The mainland Chinese stocks also appreciated. The Shanghai Composite rose 0.36% at 3,576.89, and the Nikkei also topped 0.41% at 27,935.62. European stocks were higher on Wednesday after struggling to regain ground amid fears around the Omicron. DAX topped 1.44%, CAC 40 of France 1.34%, and London FTSE also topped 1.36%. US stock futures were lower in early trading Wednesday on fears that the new Omicron COVID variant and the Federal Reserve mulling a quicker than planned exit from its easy monetary policy. Dow Jones Industrial Average dipped 1.86%, same with Nasdaq Composite dropping 1.55%, and the S&P 500 also depreciated 1.90%. Stocks in Africa are still trading mixed as investors remain worried about the Omicron COVID variant, especially after Nigeria recorded its first case. That's the Global Market Review. I am Bosede Abel.
Thank you, Bosede. Business Express returns Thursday by 9:30 a.m. I am Benny Adams saying, stay safe.